our number one bombshell truth about the market. Over the long term, the stock market is batting 1,000, and there is no historical event it has not overcome. Now, that's not a guarantee that it won't in the future, but if you look at history, there is no historical event that the market hasn't gotten through. And you go out 10 years, guys, and you see that history shows the threat of a negative return on a 10-year rolling basis. So that's basically section off any 10-year time frame according to the S&P 500, and that's not the entire market, but that's the broad-based index that we use when we look at these things. There is less than a 6% chance of a negative 10-year rolling return. And if you go out farther than that, it's even better.
Yeah, I want to take a look at a chart that we've got here because I think this is the essence of investing here at GenWealth. So this chart basically shows you over holding periods in terms of years, and across the screen, if you're listening on radio, there's a list of 1 through 15 across the screen, but it shows you what the percentage or the odds are of making money over different time periods. So for example, in the market, you're going to make money on average about 74% of the time if you look in 1 year time periods. If you go out 5 years, you're going to make money about 83% of the time. If you go out 10 years, it's about 93% of the time. But Janet, if you go out 15 years, history shows us that since 1950, 100% of the 15-year periods since 1950. So in other words, from 1950 to 1965, 1951 to 1966, going on and on and on like that, there has never been a time that you've held money in the S&P 500 that you've lost money. And that is the essence of how we invest money here at GenWealth.
That is one very important aspect, but I think another important aspect for people to understand when you're investing, the piece of investments, if you will, the market that you hear the most about is the S&P 500. So when you hear about the market and it sounds singular like it includes everything, they're talking about the S&P 500 more times than not. And those are the statistics that we just put up and shared with you. My question is, what's your market? Where are your investments? And guys, even for our team, of advisors, as they're putting together a plan for a client, there is in most of them a degree of exposure to the S&P 500, but our clients are not quote unquote invested in the S&P 500. It's not like 100% of anybody's assets are reflective of that market. So when you hear the market's down, okay, but what about your investments? How are your investments holding on? And then we go back to the portion that is exposed to the degree of volatility that we see in the S&P 500 in those shorter terms. We don't need that money for another 15 or 20 years. So we're buying time to make that be okay before we get to it.